I'm very happy there's so many people here.
Yes.
This is awesome.
Thank you guys for coming out on this snowy morning.
Yeah.
Love the boat.
So appreciate you all coming out. We're just here to introduce the folks from CMHC, and they're going to do a small presentation on the housing information and maybe answer some questions on some of the new rules, because even though I was here not too long ago talking about that, there's been other changes that have been happening, so they're going to update us on all that information.
And Heidi for bringing us here. This is excellent to speak with you. So I'm Bev Gorman. I am the account manager for CMHC for this area. So I cover from here, basically Innisfil up to Perry Sound and then out to Owen Sound area. So anything within there is me. So if you ever have any questions, you can reach out to Michael, and he can, if he doesn't have the answer, he can certainly reach out to me. There's where I was looking for you. And they can reach out to me. So like he said, today we're going to start by doing a market update for you to let you know what's to be expected going forward. So I'm going to introduce you our market analyst, Abdullah, and he's going to go through that with you.
Thank you, Mike. Thank you for inviting me, and I'm very happy to be with you guys. I see like very excited audience. That's good, and I thank you also. I'm very pleased with the turnout. That's very good. So we have lots of people here, and
Sorry.
no worries. So like I said, it's very exciting, and also for the audience, I know like for you guys, you are like eager to know more about the market, what's happening, and they can see it from your eyes. That's what you are doing right now. It's good business, and you normally for like to get like insight, I get it from the like realtors, I get it from mortgage broker, and from lenders. When I talk to them, we go even for the builder and stuff. You get all this information, but at the same time, we get different from the government, from also from municipalities and stuff. And this one is help us to build like what the market information, and we get some market insight like to do our report and everything. For me, I'm doing this job for almost 10 years with CMHC, and I was like business analyst and market analyst for the area for Peterborough and Lindsay and Quarter Lakes, and like almost right now 5 years I'm doing for this area for Berry CME, and Berry CME too is include Innisfil, Springwater, and the city of Berry. So I want to make this information more interactive, make it more exciting. I don't want you guys just to sit and listen to me like, you know what, we're just going to be boring with this guy he's saying, but it's good if we can make it like more interactive, and they will get from you and you can get from me. So if you have any question, just not difficult ones, please.
It's okay, we won't give you any.
So, okay, so what we're gonna give you, like right now for my presentation, we'll start to talking about like what is happening right now in Canada, a little bit about the States, and we'll talk about like Ontario, but also we will be talking about different factors that affect the housing market, and I will ask you about that too, and then we will go to see what is the situation right now for the market here in the area here, and even I said like for you guys, you know much better than me because you are in the market, but I will give you like the overview and the global situation. So as you see here, my name is Abdullah Masoudi, so I can give you my business card later on if you want like information about the market. If you want to send to your client like report or everything, we have some free report in our website. And right now actually working with on the rental market right now. That's going to be published on November 29th. And we last month we published the housing market outlook. And this one is giving you like situation what is happening right now and what's going to happen in the next 2 years. So it's like forecast. Our forecast and give you like, and this one is good for you guys to know about the market, but also you can send it to, it's free of charge. You can just download it, send it to your client if you want. And also you can go there is like, we have like a portal on our website, and that portal you can customize it and you can get all the information about the market, like the start, like the, even for like different areas, like for Innisfil, for, I don't know much sure about if it go by county, but there is lots of information there and it's free of charge. So, so we go back to the market and what's happening right now, what the situation in the market. So we have some information here right now. Just Give me 1 second. Okay, so you can see the screen? Everyone?
Yep.
Okay, so we talk first about US. US, even the growth is not that big, but it's creating jobs, and we see a lot of jobs. And you see the importance of the US to Canada and to Ontario. Like Canada is first partner of the state for the trade. So we have. So we are happy when we hear like there is more jobs in the state, because creating jobs, that mean consumer confidence, and that mean consumer confidence and consumer spending. So that means they're gonna import a lot of goods from Canada, and especially from Ontario. And this one we have like for last in October, it was like almost 400,000 jobs created in states. And it was like it has been for a while right now, and even for the unemployment rate, it was down. And during that like 8 period or something, it's 8 years period, it was down from I think maybe 10% or something. So right now it's around 5%, which is good for the economy. And at the same time for Canadian employment, it increased for like in October about 44,000 jobs. And this one is mostly in British Columbia and Ontario. So Ontario, if you check also the month before, you can find Ontario all the time in advance creating more jobs, and this one is good for the economy. Mostly, as you know, like for most people in Canada, they live in the horseshoe, they live in Ontario. So when there is more creation of jobs here, that means people they having jobs, and they have this confidence spendings to buy houses, and we will talk about this more after. So for lower energy prices also is very important factor, and I can tell you why it's an important factor, especially for the area here, because lots of people, when the oil price is down, that means the people they are enticed or encouraged to move to the area. And because you know about what's happening in the price in GTA, and that's one of factor that's push a lot of people to move different to this area, and because of the prices they are very low, and that give also to people to spend more. So consumer spending will increase. The Bank of Canada also, this is very important factor. The factor for affordability of the housing, the affordable housing, like mortgage rates, and you know that mortgage rates have been lower for almost, I think, since 2009 or 2008. So it's toward the lowest in 50 years. And some of you who have been like in 80s and 90s remember like how mortgage rates were at that time. 20%, 15%. I see like some money back then, you know. So at that time, some people they work out. I don't want to put you on spot. But
It's okay, Mercy, you did it for you.
Do you remember those days, Marcy?
Yes.
So those days, they are behind. I know, like it's not. I don't think it's gonna happen again. But you know what? That time was horrible, because a lot of people they work out from their home. They can afford the mortgage. They can afford. And you can imagine right now. You have right now interest rate like at 2%, and they're 20%. So right now this is the tools that Bank of Canada has right now to control the situation, and to like for example we see like the inflation rate. Inflation rate, this one we have like target, and it's not just here but also in states and stuff. This 2%. So how to keep this 2%? And if they know that it's gonna go up, the inflation rate, they will play with the interest rate. Right now the interest rate, it should be like in that level we have right now. And this for the state right now they have the inflation going down. So I think it's 1% or something. So we'll move to increase the interest rate. But also there is something of the uncertainty. They don't know what's gonna happen after, you know, the election and everything. So it's kind of, we'll see what will happen. But for us, normally when we do this forecast, the forecast for housing and everything, we try to put all in consideration. And we have like, we put like a range And this one, what's going to happen like in the extreme, lower risk and the higher risk. And they explain that more after. And also another factor which is good is about lower Canadian dollars. And this one is good. It's good for Ontario. Like Ontario is more oriented to export. And especially if like you know what is funny about Canada, what's good about this also is the balance. It's like scale. You have like if something happened good in British Columbia or something, or prairies or something, you see maybe it's impact Ontario and Quebec. But if something happened the opposite, you see there is balance. So it's all the time you see right now there is more. We know that there is decrease like in the oil prices, and that affect like the prairies and the maritime. But also we see like for Ontario and Quebec and other provinces, they enjoy that low price, and that helped them to be competitive internationally, and that helped them to export more. And that's what happened with Ontario. So for the Canadian dollar, it has been like, if you remember, there was like parity before, like in the period of the recession, and then it went down. And it's good right now for Canada that we have a lower Canadian dollar, and that attract investment, that attract Americans to come here and spend more money, and that's what we want. And also it does help for our export to be more competitive and to increase our export, which is good for Ontario and also for Berry, for this Berry CMA. And they see with what we have at the illustration, you see like for the confidence, the consumer confidence is more stable right now. So it's not going down or stuff. The time when it goes down, that means like people they don't buy, people they try to save, people they're scared of the future, but right now they feel more, especially with what's happening with the real estate prices, and people they think, not to think, that's the reality, they have equity and stuff, and they can spend more. They can spend more to buy cars, they can spend more to buy goods and stuff, which it gives them more. And this one is like engine for the economy that creates more opportunities and more jobs. And you see, the only bad news I want to tell you, that I don't know, like might be bad news or good news, that's for the economy, like especially for Ontario, all the best, like GDP at high level and stuff, all behind us. Like you see right now, we see like right now it's not going to be that increasing that much. So like for 2016, you see into pre-2018, in that recession, it was like around 3%. But right now, if we get like 2.7 or 2.8, we are happy about it. So, but it should be increased. There's just it's not going to be the same like it was before. So we think like the economy is more right now, because like we said, we talk about export. Export is good, but also there is a lot of competition out there. Competition from other countries, competition from maybe what's going to happen in states, maybe more like production and stuff, and that's going to help like to create a problem with that. And if we look like globally, what is happening globally, we see like, for example, China, like the economy is going down. And that you see here.
Do you have the pointer here for?
Yeah, you know what, it probably won't work on it is a pointer here, but I think it,
Okay.
there it is, see, but it won't work on the TV.
Okay.
Doesn't show that.
Okay. So you have for China, China is one of the, we can see, first consumer, like content consumer, like for the aggregate, like for the commodities and stuff. And that's because China is the demand is going down. That's what's decreased like the demand on the commodities, and that also affect the price of the commodities. And you know that Canada is one of the countries like producer of commodities. And we see also for the states it's okay, but it depends what will happen, and depends on, but for sure it's going to be growing because more jobs and stuff. But you see this one is consensus. This one is not based on one organization, but a different organization, and they have this consensus for the increase of the world GDP. So you have Europe, it's more stable, not much increase, and you have Russia here, it's increasing but slowly, and you see the world, the global GDP is moving up but slowly also. So we don't expect much increase, like it was before. But you know what? I don't think it's bad news for you guys because more you are in local markets and the housing market is different story, especially here in Canada. So for the housing market in Ontario, it depends what the risk, upside risk or the downside risk. For example, you see if the US economy is growing faster, it will help us that we're gonna have more demand, even for what's happening with the election right now. Maybe people, they will move to Canada or something, it will be more demand in housing. We don't know, it's all possible. So, and also we have foreign capital inflows. This can be, like I said, from the States, maybe from China, from other countries. So a lot of investors, they will come to Ontario, and that's what we're talking about, foreigner investments. And these people, they will come and to buy houses here, and that's what will push like the sales up. And the downside risk we have if we have more weaker global economy, because there is limitation in trade, and or they have like the both like the debt, and we have the erosion of affordability erosion, and we have also this growing housing imbalance. And housing imbalance, for example, for the income, like for example, right now people they can if you can compare the income with the prices, you think about it is imbalance. It's not like the same before. You have the income, like you can buy for 100,000, 150 or something, and you have the income, you can afford it. Right now, forget about it. Even you want 100,000 or more, it might be difficult for you to buy unless if you have some investment or equity or you have money that you save. So we go to the local market right now. So are you good now? Because I tried to take you here and there. So right now we'll go to the. So we'll see here, like this is the market for Ontario, for Barrie CMA. So we have like this one is employment. So what do you think about employment here from your perspective? Is it doing good, bad?
Mostly retail.
I'm sorry?
It's mostly retail.
Retail, yes.
Low-end jobs.
So what does mean retail?
Low-end jobs.
Yes, that's good. Yes. So the factor that affect the housing market, we have like employment. People, they need to be employed to buy house. That's right. What else? And they think we need people, so population.
Yeah.
And something else I talked about it. And maybe you're gonna ask about this. Interest rate.
Yes.
Yes. And what else?
Confidence.
Yes, this is important. Consumer confidence, and also earnings, because you need to earn to buy house. You earn, you save money, you build credit history, and then you buy. So for the job in the market in Barrie, like you said, it's like a lot of low paying jobs, and this one is retail and in services. So most people they are employed in services. So if we add like health with the other services, so it's like about 45% of people working in services. And we have also an important sector. Also, we have trade, 17%, and we have manufacturing, 10%. But the problem for this area, the manufacturing, they don't employ much job because it's more technology based, and you see the whole company or something, it can employ 20 people or 30 people. So it's even we talk about manufacturing, but it's not creating jobs. So more like the problem, what's happening right now, maybe it's imbalance. You see there is a market that the employment, and you see the housing market. The housing market is doing very good, and employment is not doing good. So where these people coming from? The people they are buying.
Toronto.
Yes. Because these people they come with their job. They have like their job. If they are like household income like 100,000 or more. So these people they are already ready. They come with the equity. They sold their home in GTA, or they are first home buyer. They already save to buy. So for the employment, this is what the situation for employment is going down. And this is
Barrie or?
This is for Barrie for CMA. So it's here for the last year. It went like 3. I think this year it's 3% is going down. So but it's not bad news. You know what? It depends, because it depends situation that you have here. So most people they work in GTA. Most people so it's not. If I see that somewhere else, maybe it's gonna be a problem. Oh my God, this situation of employment is not as bad. This creates problem. But for you guys, you don't need to worry much. And you have the unemployment rate is going up. And you see most people that they are like affected in this unemployment is people between 45 to 64. Yeah, especially for full-time jobs. So the problem, we thinking like the people they are like, we have like decline of full-time jobs. And that means maybe people also they go on retirement, but this job they are not replaced. So, and that create like the full-time jobs to go down. And also we have youth. You have the youth also, employment is problem. Because it won't, like 2 years ago I was talking about like youth employment was going up and I was doing very good, but right now it's the opposite. It's going down. And what that mean? That means that youth, it's going to be difficult for them to create a household. And the formation of household, and it's going to be for them difficult to leave their parental home. So that's mean. Okay, that's right. Or they have the choice to leave the area. So they might need to go to GTA or go somewhere else or outside of province to find a job and to build a home. So not to build a home, to formation of household. So for the formation of household for these youth people is much difficult right now. It's much difficult, and that creates problem also. We don't see much demand for rental market from them because they need to stay with their parents. They will live in the basement or live with the, so that's, or they need help from parents, that's right. So this one, unemployment rate increase, and we have the average weekly earning. This is another factor for the household, for the housing demand, and this week it also is weak. We're talking about low-paying jobs. So because people they don't, there is not many full-time position, so there is no increase in the income, and also low-paying jobs that bring the income down. So the earning is weak. So this one is weekly earning. We talk about like household income, and household income with the couple they can have like both income, and that's if you check for the area, for example, from National Housing Survey in 2011, we have more than 60%. Just try to remember. We have more than 50%. They have more than 60,000 income, and they think 30% they have more than 100,000. So people living in the area they can afford to buy a house, but 30% more than 100. So it's more comparable to other areas like, for example, Toronto, and because a lot of people when they move here, they have all the income, and they have like we said, talk about equity and everything. So they come here, they don't need to start like job here and they go like to retire or something. So they are already making money, and that's what's counted for their household income. So, and the other factor we talk about also is the population. Where is these people coming from? You're right, you said Toronto, GTA.
Excuse
But
me.
mostly,
There'll be one more, just so you know.
Stay back, you can go.
so you said people they come into Toronto from, they come into Barrie from the GTA. That's right. And from your experience, who's these people?
Police, fire, airline pilots.
yeah.
Wow, that's good. So
Professionals.
all
Yeah,
professionals,
those are
yes.
the ones that seem to.
What about
work.
seniors?
Yeah.
Seniors, yeah, some seniors, yeah. Less seniors than, it used to be, well, I remember 20 years ago,
It was more.
before my husband and I moved here from Toronto, it was like, oh, we're gonna retire in Barrie. Because that's just what it seemed like, that kind of retirement area from Toronto. And now it's like families in their like 30s, 40s, you know, 50s.
That's right, young families.
Yeah.
Yeah, young families, they choose because they probably because of the housing affordability in GTA. And they have choice, they need to make choice. They need to live there, and they can live in condo or something that they can afford, or go go out of GTA and buy single detached home. And all people, they love like to have backyard, especially for kids to play and everything. So that's when they move, and and we see a lot of. There is one thing that I see, you can go like on 400, and you see it over the years, it changing. Like right now is like bumper to bumper. When you go like in the morning going south, or like in the evening going north. So you see there's a lot of people coming from GTA. And these people, we call them like intra-provincial migrants. So they are moving from other parts of the province to here. And that's what you see here, you see it in red. So is the important component of the migrant to be CMA. And if you see like, if we talk about like natural increase, there is not much natural increase. You see natural increase is more stable. So like what natural increase is like birth minus death. So this one is more stable. There is not more to increase the population, but you see also for inter-provincial people they are living, it's slowing down. Before it was after the recession, or during the recession, lots of people they moved to the west or moved to other provinces, but right now it's slowing down. And maybe people they are coming back, but you see here this is most important. International migration, not much, maybe around like 200 people a year, so it's not much increase here. For even like people they can come from China or other countries, bring in money and stuff, they still not attractive for them. They go to other places, but not yet. But it can happen. But you see more people they are coming from other province, and that's the most important. And also, you're talking about seniors. Seniors also, it's big component. Why? Because I think the baby boomers reached the age. The first baby boomer reached the age of 65 in 2011, and this trend it's going to be for almost right now 2016. It's going to be for another 20 years. So lots of baby boomers get their retirement and going somewhere. And these people, especially what's happening with the housing market right now, they have money. They sell their home in Toronto for 1 million or something. They can come here, buy property for 600, 500. They have the rest on their bank, and they can enjoy their life. And the population increase. Actually, for Barrie, it was one of the fastest. Yes, it was one of the fastest. I think 2011, it was like 5%, similar to Ontario. But right now we see like there is more. It's getting more stable. The increase is about 1% or 900 households every year. That the increase for the population here. And this is if you want to see who's most people like the increase affected. So you see a lot of seniors. Seniors is going fast. So what does mean for you guys? Like with this chart, you see what is your niche, like that you need to focus on. So you have people they are coming from Toronto, young families with kids or without, and you have also seniors that's going fast, very fast, and it's gonna for the next 30 years. And you see also their children or the people they are coming from Toronto, the one for 45 to 64 also is going up. For youth is more stable, and also for 25 to 44. This is the forecast from the Ministry of Finance. So we come to the housing market right now. We talk about three components of the housing market. You have the resale market, new construction, and the rental market. So what do you think about the housing market? What's happening right now? Crazy, yes. Vegan wars?
Not so much.
Not so much like before October 17 or after October 17?
Yeah,
exactly.
there was lots.
Lots, yeah. So vegan war is slow now?
It's softening a little bit.
Yeah.
Wow, that's good. So that's mean what you see here when everything
Marianne's
is
like,
right.
really? Every single deal I do is a bit more.
It depends on the
Vegan
price
war,
range. Yeah.
okay.
Depends on the pricing.
Actually, I'm surprised that the higher price ranges like the $1 million price range are still bidding wars, even in that price range.
It's crazy.
Yeah.
That's what's happening to all of you. That's good. So here what you see, this situation, who sits softening? It sits softening, softening, this is softening. You see here? Yeah, little bit.
Just very slight,
Very slight. Okay, this is this ratio is very important for us to know what is happening about the market. So it's called sales to new listing ratio. This one is very easy to calculate. So it's the number of sales divided by new listings. It gives you idea what's happening in the market, and we can, based on that, we can define the market, what the market like the situation is. So, for example, you see here, in 2008, this ratio went down, very down. So it's more close to buyer's market. Here in this area, shade area is balanced market. It's buyer's market, and that's what does mean buyer's market. If you are in buyer's market, what's
More
happening?
inventory of homes than there are buyers.
Yeah, and the buyers is the king.
Yes.
Yes, and you like as a mortgage broker, you ask, oh please, you wanna buy house, come do that. And you know, at the same time, the realtor having difficulties with the buyer to convince him which one he gonna take and this. So the buyers that he's choosing, there is too many properties there, and the sellers is just waiting. But right now, who's the king?
Sellers.
Listings.
Yes, that's what's happening, and that's what you see here. It's up. So here's sellers market. So balanced market is more negotiation between the buyers and sellers. They have the same level, okay, the prices, you can decrease a little bit of the listing price, increase a little bit, go back and forward and back and forward. Here, there is no back and forward, it's bidding war. You accept the price or you're out of the market. So that's what's happening here. So you have sellers market. And this is happening since almost right now in Berry, 2014. Very strong, and or you can go back maybe to, but that's mostly in 2014 become more like intense. And you see like there is lots of bidding wars, and when you have bidding wars, what does it mean for the prices? It go higher. Because you know what? To increase, and you see here, look at the sales. And we have a lot of sales. What's the challenge there that you have? Okay, buyers, they want to buy, they got approved for mortgage, they give them pre-approval, everything is fine, the realtor is looking for house for them, but they can't find.
Low inventory, yeah.
That's right. So low inventory, and that's what's happening in this period. So you see here, I'm sorry guys, I just forgot about you. Okay. So you see here it's going down, so low inventory. So there's few houses, and people they are competing about these houses. So the price is going up. But that time when the price is going up, what's happened? Some sellers they will see, okay, some people like people they have a house. You see, oh look at the prices they're going up. And my neighbor he sold his house and he wants to Collingwood or somewhere 20 minutes far or 15 minutes from Berry. Why I don't do that the same? So he put his house on the market, and that's what start like because of the increased price. So that's what pushed the number of listing up, and that's what creates a little bit of balance. That's what you see market a little bit softening. It depends also on what market you are in. If like for $1 million houses or something, so it's everything is we can say like it's relative. And for the prices, so for you see here, so what's the forecast that we have for the next year? It depends. We look at different consideration. What will happen if this is happen? This scenario. So we see like for the range, the market is not gonna go down or something much. So it's gonna be more stable, or yes. So there's gonna be more stable. So we're thinking like the sales will rise sharply in 2016. 2016, I can tell you, is like on. But like 2017, 2018, we think it's gonna be slowing down a little bit, but not down, just like slowing, as more stable. Okay, so it's gonna be like about 5,500 unit to 5,900 sales in 2017, and and the prices will keep going up. So for this year, like 2016, I think it's between 8% to 12% increase in prices. Yes.
Last few years.
Yes, last few years, yeah, that's right. So it depends, but the problem with the berry, what's gonna happen, there is the problem also what's happening in the new construction. The new construction is crazy right now. I don't know if you heard about that or not, but it's the first time it's happened in berry. I can tell you, like for all the years, you see it's the first time, like up to October, the end of October, we have 1,600 units built. And it's the first time also that, normally I shouldn't talk about that right now, should maybe later on. Okay, can I keep talking?
Do you know what the ratio though of like condos?
Yeah, I will tell you about that. That's
detached?
it. Okay, that's,
Yeah.
we'll put it in, remember this question. Okay, so we have the price is moving up. And so the price is moving up, and it will continue. It's not going to be the same rate, like I said, for new construction, because also there is opening for new land, the annex land from Innisfil, and that's because right now a lot of builders, they are just waiting for that, because when they're going to give them the okay, they will start building a lot
Right
of.
across the street.
Yes, yes.
Do we know when that's gonna start?
That we try to guess. I ask a lot of like in the city. I ask, but nobody give me exact date. But we say like 2017, 2018. So.
The groundbreaking, the first place they're starting is, I talked to Jeff Lehman, the mayor,
Yeah.
and the first place they're starting is this side of Veterans, the 5th, on the north corner there. That's where they're starting their first project, and that's the fall of 2017, they're breaking ground.
That's right. That's what we're expecting.
So, and then
And
there's-
to 2034.
And this one, just between this one, the first phase is like about 40,000 units.
14,000.
Yes,
So
40,000.
they're expecting a population in the annex land of about 40,000
Yes,
people.
Interesting, because you were talking about employment
Yes.
and going down.
yes.
But yet I know a big framer that's begging for people. But he's building condos and he cannot find enough
Workers.
people to work for.
Yeah, trade. That's right. That's we were surprised too, because we see like, okay, for construction
He's
is
like
going down, but
begging
actually construction is
for
not.
tradespeople.
So where these people coming from? Maybe they are like contracting other companies in GTA or somewhere. So people they're gonna come and
He's trying to bring people from Western Canada here to work for him.
Yes,
He
yes.
can't find people to
that's true. That's true.
It's
Yes.
such a hard
do
time.
the work.
Yeah.
It's just crazy.
So this one, this. I'm sorry.
They're pulling people from Ontario.
Yes.
Houston,
Yeah. Yeah, I think trade is all the time problem, because trade you can find people like not too many, and the problem is licensed people to trade, and they try to go like all over Ontario to look for them. They can go to the west and stuff, but all the time it's hard. So this 40,000 or units, that's gonna affect the price for sure, because like when they're gonna start, right now the price for new construction is going up, and also for resale, but we don't know actually what is the impact it's gonna have, but definitely will be something. So, you see the new construction, we were talking about the percentage of the different, is the first time that's happened in Berry CMA. Ellisville, Springwater, and City of Berry, first time that you see more multiple projects, high-rise projects. So there is a lot of high-rise projects, because all the time before it was like more single detached homes.
Now we have.
Now like 70% or something. Right now in this year we have more than 50% multiples.
Wow.
And you know what's another one thing? It's the first time happening also. It's the first time that you build more multiples outside of the city of Berry. And where it's happening in Israel. So there is a lot of condo happening in Israel too.
You're brilliant.
Where?
In Aurelia too.
Yeah.
Yeah, yes. But this one also, I think the first start with the 240 units. I think it's close to the beach or somewhere. So, and after that there is another 140, and it's...
I just found out about one that's coming up that they just got draft plan approval for on Friday for another 210
Yes.
in Innisfil.
Yes. And that creates problem for me, because I'm doing forecast for this area, and I normally we try to be like exact on the forecast. And the first time this year, it's I can control that. It's very hard. Even right now, I put in like the forecast between, I can tell you, like between 1450 to 1600 units. But you know how many units until now? It's 1610.
Wow.
So I'm over. I'm trying, because normally when you put the forecast, you need even to convince your chief economist, you need to convince this. You try, like, he will tell you, okay, last year it was like 900. And right now you come with 16 or 15. It can happen, you need to lower but right now it wants more than that. Because there is lots of construction, I can tell you. Like, and you can ask the builder, they are very busy. And just not for new construction, also renovation, everything. So this year was amazing. And you can see here, like, jump in the total start. And even like for singles, but we still have more singles in Berry, but also there is a lot of singles in Springwater and in Innisfail. And if you know, for you, I don't know if you work in marketing in Springwater. So what's the difference? Like what like type of houses and
More rural.
Was
All
yeah,
more
higher
higher,
end.
well and septic and
Bigger
more
lots.
rural.
A lot of community
bigger houses,
Like
expensive
more-
houses.
More
That's right.
state.
Yes,
you know.
that's right. More states. So a lot of people, when they, for example, they sell their home in Berry or so in Innisfail or somewhere, they want to move to Springwater or North. So if they want to spend more money, they can go there and buy big house, big lot, you know. So, and you can see that. See, that's more right now is shifting. Before you can come to Berry and you can buy even for less than 300 or maybe under 250. Even the condo right now you can buy it for 250. If you will need 2 bedroom, 3 bedroom, you need to put like more than 290, 300,000. So this is shifting for the prices. Look at the prices. This one is 2014. Over 400,000. This share, look at this, almost half now. So it's become more expensive now. And the prices, you see most like the increase of the prices here, like for Springwater, it's going higher. You see for Innisfail also it's going like, it's peaking. So the lots of increase in Innisfail. And you see Berry is more like stable. Because the problem with Berry, there is scarcity of land, there is no land to build there for singles. And what they do right now, they just build what they planned before, like especially for private homes or. Okay, so right now you have any question about new construction or? So most for you guys, like right now, you see, like for you deal with, I don't know for you, anybody you do with the new construction here? No?
Those people aren't here today.
They are not? Okay. So that's mean this is good news also, because when you have like new construction and these houses, there are lots of also people, they are moving, like you said, from GTA. Some people, they are investing on this new construction. That means they're going to be on the market maybe after 1 year or 2 years. They're going to be resale market. It's good also for activity for but this was the only risk is when the annex land will start and will be more new units. What's going to happen? It's going to prices will go down, or so it's kind of tricky. And what do you think about the rental market?
Close to zero.
Low vacancy.
Yeah, low vacancy.
Very low vacancy,
Very low
high
vacancy.
rents.
High rents, yes. Could you compare the rents here to Toronto?
Yes. Getting
Yes,
there,
We're
yeah.
getting pretty close.
Okay, so we have like 4, you can see right now is 4, yes. We have Ottawa, Toronto, Kingston, and Oshawa, the highest rent in Ontario. Right, Oshawa wasn't included before, but right now it's the, yeah, so that we have right now 4. We have the winner. I don't want to talk about because we are not allowed to talk about what, because we do survey every year for rental market. And right now, we finish almost the report, and we're gonna publish it on the 29th. I wish I can talk to you guys about it, but
You can, we'll.
We won't tell anybody.
We won't tell. We won't tell.
Just everybody
The
that's.
4 highest rentals were Ottawa.
Kingston.
Oshawa and Kingston, yes. Yeah, four. The four.
Oshawa.
Ottawa, Barrie,
Oh, Barrie.
Barrie, yes. Yeah, so Barrie is very expensive. It's very expensive for rent, and it's surprising. Like you can find like the vacancy rate is like about 1.3%.
Excuse me. How
Yeah.
often do you
For
put out the rental report?
It's gonna be on the 29th.
But how
Once a
often do you
year.
do it?
Do once a year.
Just once a year?
Yes.
Same month?
I'm sorry?
Same time every year?
Same time. So it's the survey is done on October, and it's published by the end of November. So it's gonna be published this year on November 29th. And I can tell you like our forecast, because it's very tough like to say, especially for the vacancy rate, if it's gonna go up and down. And I can tell you that I get it right. So this year it's gonna go up. So we in our here, not that what I put here, but it's I said that it's gonna go up, and this one for different reasons, because the what is called the Larson University is moved from Barrie. That's for students. There is also construction for 76 units, I think, for students, and each unit it has like 4 or 5 students. So there are a lot of students they're gonna move from rental market, and also the completion of the condo units. Lots of condo units going to be completed. That's going to be a lot of people. They're going to move from rental market to ownership. And what else? So all these factors tell us that the vacancy rate will go up. But if the vacancy rate go up, what does it mean for rent? Huh?
Goes down.
But in Barrie, it won't go. Let's keep moving up. Yeah, so for
We're
various
exception.
so this one I don't know, like for a lot of before I used to talk about that one for my presentation and stuff, there is a lot of investment opportunities for rental. There is a lot of investment opportunities for rental. So a lot of people they can come and buy condo or something and rent it out. And the problem for Barrie that the universe, the primary universe for rental is very small, the lowest in the 15 CMA in Ontario. Is the lowest. So it's about I'm sorry? The universe is that the purpose building, like rental purpose building. You see this building is for rent. Okay? But the number of units is not enough. There is like just 3,500 for the whole. When you go like to Toronto, there is a lot. And that's what makes rent is very expensive. You go to Barrie, you look for rental units, you can't find because there are not too many. So what's your choice? You go to secondary market. And secondary market in Barrie is higher. So it's like 2/3 of the total rental units. So lots of people, they rent their homes. They have second home or something, they rent it. Or they have condo, they rent it. And that's, so there's lots of people, they are making money out there. Because the primary rental market is very, very small. And that's what makes it more expensive. So, and for secondary market, it adjusts, it's based on demand. So if there is more demand on the rental market, that's a lot of people will say, okay, people, they can find unit to rent. So why I don't rent my basement? Or why I don't rent my house? Why, so there is something like that. And that's what makes it more special market, different than other markets, because they don't build much rental purpose units here in Barrie. So the vacancy rate is down and expected to go up this year. And for the cost of ownership here, for ownership and rental is going up. We see here, like for example, the change. This is change in cost to own and change in average rent. So average rent is this one, the blue one, and this is going up. So it's become more expensive year after year. And the problem, the question I want to ask you, who's renting here? Student, yes.
Yeah, they get professionals too. I've had a lot of
Yeah, a lot of
doctors,
people, families.
pilots.
Yes,
Well, if
yes.
the housing prices are going up and they can't afford, then they have to rent,
Yeah,
That's right.
so then the rent's go up.
A lot of interim rentals as well, so waiting for their bill to get
Yeah.
their
A
bill.
lot of
Yes.
people waiting for their new build,
That's right, yes.
because they wanted to sell when the market was hot.
Yeah.
That's right.
There are also people who come out of relationships and they don't want to commit
Divorces.
to buying a house
Yeah.
right
Yes.
away.
So they rent. Because you see like out there, you see people if they go and rent in Berry for 2,000 to 2,500 or something, it's much expensive, you know? But people they are renting this, that means there is a lot of profession they are renting, they come from other areas or something and they just rent over here. And maybe they will stay there for 2 years, 3 years thinking like maybe why we don't, I can buy, and even if I move from here, I can do it as an investment. And the cost for the mortgages or the carrying cost also is going up. But it's going up for interest rate, maybe changing, but also there is like the amortization period, because like for here, you can ask yourself why this one is too low here, because the amortization period was like 40 years. Yes, 35, 40, like was, that's like entice to encourage people to buy that time, so you're not gonna be like, because that during a recession, so to help people to buy, and not like to make it worse, because everything it was like bad, even state and they were, so, but it works. Like they put like these 40 years for 35, and it works, and you see the market will jump. And if you compare like Berry to other areas, you see for the rent is most expensive, one of the fourth most expensive places, and also for the affordability. You see here, this one is actual income of required income. So the actual income you have, like for example, how much you're getting on your income, you can see 50,000, and to buy a house you need 70,000, for example. So 50 divided by 70, that gives you the affordability, and that's what you see here. The cheapest area is Windsor. Because the housing, yeah. The expensive area is Toronto, and you have Hamilton and Oshawa. And I can tell you, for what's happening in Berry is the same what's happening in Hamilton and Oshawa. Lots of people moving from GTA, lots of bidding wars, and that's what's happening in all these surrounding areas in GTA. Okay, so we have like the housing market outlook for 2016. This one, you can find it there, you can read it, and you can do lots of information, maybe other the information that I talked about, but also you have housing market insight. This one will give you like special topic about the housing market in different areas. And you have also rental market report. This one will be in November, end of November. And you have also the housing market assessment. This one, we don't have it yet in Berry, but we have it in Canada, and that will give you like with signals, like you tell you like if there is problematics in areas. It give you with even with colors. Is it red? Is something gonna happen in this area, or yellow or green? So it give you like it classify all the center in Canada. And if you want to contact me about anything about market, you have my, or I can give you my business card if you want. So do you have any question?
Shelley's condo one, what was that again?
We already went over it.
What are you, CMHC, doing to increase the senior housing retirement home picture? It seems to me there's very little for retirement housing, and the government's trying to encourage people to stay in their homes longer.
Yes.
But it's not a solution for some people.
I just gonna tell you one. I don't have much information about that, but I have one thing information. But from our department, the market analysis, we receive a lot of reviews for senior home. So that means there is a lot of seniors home they are built out there. So we receive a lot of reviews. That means the people they apply to build senior
I
homes.
see. Oh, good.
So before they can get the mortgage, it needs to go through us, and we need to review their the document that they submit. We need to review them and see if this one we do like a market study, we do feasibility study and stuff. So I can tell you like it's a lot of them.
It's also becoming big for investors. It's
Yes.
another avenue investors are starting in now. they're wanting the smaller retirement homes.
That's right.
They're pretty big money makers.
Yes.
Private ones.
So a lot of right now, CMHC is pushing for more affordable projects, for affordable homes and stuff, especially with the Liberal government trying to encourage people, to encourage investors to invest on that, and also for senior homes. Yes. Yes.
We had noticed that the list you had of affordability.
Yes.
On your slide, it said Toronto, Hamilton, and yet you had previously mentioned Ottawa, Barrie, Kingston, and Oshawa.
Yes.
So they didn't correlate.
Yes. This one is for ownership. This one is for
Yeah, the one
ownership.
was rental.
Yeah.
The other one is
okay.
rental. So rental, I can tell you for Kingston, there is more like students and stuff, and that's what creates like more, it will become more expensive. And also for Ottawa, there is a lot of people like civil servants that they move to Ottawa, so you don't need to buy there, you just rent. And that creates also more demand on the market.
Thank you.
Thank you. Thank you to Abdullah, and again, thank you to Michael Brooks for bringing us in here, because without Michael, having run into Abdullah, this wouldn't have happened.
Thank you. I appreciate it. Thank you.
So I'd like to, does anybody have any questions on the new rules?
Yeah, you mentioned that there's been some new changes, so even since they were.
Oh, Michael said that.
Marco did.
Well, there was stuff that happened on October 17th, and there's also stuff that rolls through on November 30th, right?
Yeah, the November 30th isn't going to be as huge an impact on you guys, because you're talking portfolio insurance. Portfolio insurance, very confusing, but basically, it's going to hit you more than it's going to hit them. and basically, they're just saying all portfolio insurance after November 30th has to all go through that that risk test, that stress test.
So it will
whether
really
they're
affect us, it'll affect all of us, right?
well, it will.
For financing purposes, right?
Yes and no.
Restrict some.
I got a broker in the room. This is hard. I have to watch my
It's
words.
okay, it's nice, we won't let them do the pile chairs.
It's going to be harder on the brokers, let's just put it that way. Because unfortunately, we're going to see some of the investors, so your mortgage groups, your monoline lenders, may end up, they're going to lose some of their investors through the portfolio insurance aspect. But yeah, it's a harder one for me to get into. It's a whole different department. And they're still trying, the dust hasn't settled on all that yet, as you well know.
Absolutely.
So they're still working behind the scenes to see what's going on. The one you really need to know about, and the one that's really affecting your people, is that stress test rate. So now you know, as of October 17th, anybody who's getting a high ratio mortgage, it used to be, if they took out a 5-year rate, which is in the last, since they brought out, it used to be, they keep changing it, so it used to be a 3-year rate. As long as you took a 3-year fixed rate or better, you could qualify at your contract rate. Then they bumped it to a 5-year rate, to take a 5-year rate. So in the last number of years since that came out, we've seen a lot less of the, I just lost the word.
Variable.
Thank you, variable rates, whoever said that, variable rate, thank you. We saw a lot less people taking variable mortgages because they had to qualify at a much higher rate. If they took that discounted 5-year, they could qualify for more. So now they changed it that everybody, doesn't matter what term you're in, you have to qualify by that Canada Bank rate, which is much higher.
And that's
They
only
get
for
that
insured
4.64.
mortgages, right? That's
Sorry?
only for insured mortgages, so
Only
less
for
than 1%
insured
down with most
mortgages,
banks?
exactly. Only for insured mortgages, okay? So after November 30th, again, the banks may tighten up because in order to portfolio insure, everything has to be all conventional and high ratio. If they want to securitize them, they're going to have to go through that stress test. So we'll see after November 30th.
Well, so if it's an uninsured mortgage, you don't have to go through the stress test?
Right.
Currently.
At this
Currently.
point, that could
But they might
change.
change that?
Right.
They may.
Because the banks, in order to
Yeah.
portfolio insure it, is going to have to make sure it goes through that stress test.
Because aren't most mortgages, whether they're high ratio or not, insured somewhat?
Yes and no.
Through the companies?
Well, there
Yeah,
are-
through our low ratio,
That's what
so
I
what we
mean,
call
yeah.
our low ratio. So
Yeah.
the banks will pool together a bunch of their conventional mortgages
Right.
and basically sell them off.
Insure them.
Insure them, have them portfolio insured.
Yep.
So that the investors are guaranteed their investment, is basically what happens.
Yeah, and
With
so
them
how that
getting out of
affects,
portfolio insurance, go ahead, Mike.
and so how that affects things after November 30th is there's a lot of banks, well, not a lot, but let's say the big 6 banks, they'll not insure their conventional mortgages, okay, because they may hold them on their own books and they have the capital to sustain that. A lot of the monoline lenders, First Nationals, RMG Mortgages, all these guys, they insure everything, whether it's conventional or not. Difference is you don't see it on the conventional side. You may be a client that puts 20% down with them and you don't pay the insurance fee, but they're still insuring them. So those ones are going to be affected. And so where we may see a transition is if those guys all of a sudden become uncompetitive because now they have to do this stress test with every mortgage they do, the banks would then potentially see an influx of people for conventional mortgages, but they may not want, it sounds backwards, but they may not want to see an influx of more business because then they have to have more capital set aside to sustain everything on their own books, right? So they may, and this is where it's up in the air right now, they may decide, well, we're gonna follow suit with the guys that are having these difficulties with the insured mortgages, and we may introduce some of our own stress tests for our conventional mortgages too and make people qualify at the contract or the Bank of Canada rate. So we're not sure how that's going to affect every lender across the board. It's going to affect the monolines for sure.
Absolutely.
And then maybe
Which
the
is
banks will follow
brokers,
suit.
Which affects the brokers.
So
yeah.
each of the 6 major banks will be able to make their own individual decision.
Yeah,
Potentially, yeah.
potentially.
So
Because
some
they
banks
don't-
might end up
They
being
don't
better
necessarily
than
insure
others.
everything like that.
Does
so-
everybody understand why a bank would portfolio insure? So basically, as Michael was saying, for every time they do a mortgage, a conventional mortgage, they have to keep a portion put aside, a percentage for default.
Yes.
So they have to hold a percentage. That ties up their money for loaning out. So if they can take a whole bunch of those and have them portfolio insured, that frees up their reserve fund. They can remove that from the reserve fund because they had it insured instead. So it frees up their money to loan out more mortgages.
Yeah, and the reason they wouldn't want the influx of business and have to have all that capital set aside because mortgages are cheap. They're not making much money on them. So why would they have to set aside all this extra money to support all these new conventional mortgages at 2.5%, 3% when they can be taking that and investing it somewhere else and making a lot more money, right? So that's,
So the fee of the insurance is still worth it.
And then
Yeah,
that's included in the higher rate.
yeah, so they may jack their rates up to accommodate that.
And
or
that's all
just
the
try and
stuff
slow
we're
the-
waiting to see, and
Yeah,
we won't
exactly.
really know, until next month.
Which is one of the reasons why the prices are going to stabilize.
Yeah.
So I have a question.
Yeah.
So what about investor clients that have like multiple properties and they come up for renewal?
Again, we haven't, the dust hasn't settled on renewals yet. There's a lot of stuff that hasn't come up. Our understanding, usually with a renewal, how it's always worked in the past, is as long as you are just renewing, you're keeping your same remaining amortization, you're keeping your same dollars, maybe you're switching it to another institution, that's fine, or you're just signing that renewal. Either way, that really will still follow under the old rule. You don't have, as long as you're not changing any terms of that mortgage, you're not requalified. You're just signing, you're either switching to another institution or you're just renewing for another term. That's fine, there's no requalifying for that, and there really never has been. The moment you change the amortization, so say you have 17 years left on your amortization. Say when you go to renew, those mortgage rates have gone up and you decide, I think I'm gonna raise my amortization when I renew in order to keep my payments lower, now you gotta requalify. Or if you add so much as $1 to that amount of your mortgage, you have to requalify, you're under the new rules.
So if someone had a line of credit and then when they went to renew,
Would they have to pay that off? Like, would that count as having to take more? Or
If
could they
it's
just leave it
secured
on?
against?
Or would they just carry it on as a line of credit?
Yeah,
on the
usually it
renewal?
gets, usually there's a clause in there that keeps it in second
Yeah.
position.
If you're paying down your mortgage, would you have to recall?
You might have to, but as a general rule, no, if you stayed within your prepayment privileges, okay? But it depends, sometimes that gets a little confusing, because sometimes the same as porting. If you're gonna port your mortgage, again, they're telling us if you're porting it direct, so a real true port means the only thing that changed is the address. You kept everything else the same, again, no requalification, providing, other than, of course, the house has to qualify, right, the new house. But if you start getting into a lower price range, your loan to value is going to change. Your remaining loan to value can't change as well.
So as part of this, so the banks that have those right now, they're gonna keep a lot more of their business at renewal time, because people are gonna be scared to make any changes. They're just gonna sign over and say, let's just keep going
Let's just
on the
keep
status quo, which is therefore gonna affect the mortgage brokers, because now they're not gonna have as much.
Yes
You know,
and no,
refinance,
except for
Also gonna affect
hopefully.
resale.
And resale, it's just
Yeah.
it's gonna affect a lot.
It could, and a lot of people,
Yeah.
you're right, they may think, oh,
It's
if
a
I touch
competitive
this.
advantage.
Right, but if you're switching institutions, we will never, ever penalize anybody.
But the
from
institution
switching.
isn't gonna let people believe that.
Possibly,
tactics,
possibly
right?
scare tactics,
They
you're
were,
right.
that's-
So
they
that's
get
up to you
scare
guys
tactics,
now,
yeah.
and us, to be out there educating the public on that.
Because they already do that with mortgage insurance.
Sure they do.
They pretty much make you feel, or your client feel, that this is a condition of the mortgages, you have to get
Right.
mortgage insurance with them, because they're upselling. But you don't, but people are scared to fight the bank and rock the boat.
Oh, you're talking disability insurance, you're
No.
not talking.
Yeah, no,
or
yeah, I'm
like-
talking,
Right,
yeah,
right.
disability. But the banks are just, it's pressure, right?
Sure.
To people.
Sure, they're just, and they also want to protect you in that, and they want to more protect their investment.
Of course, of course.
Of course. Yeah.
So what about second mortgages then? Because if people need to stay the same,
We're gonna
they have a
see a
lot of
lot more.
equity? Yes.
Yeah, you are going to see,
Not
and,
more.
that's what we assume.
Yeah.
You may see a lot more first and seconds. Because if, like you're right, if they can't qualify under high ratio, under the higher rates, they may end up getting first and second for the first bit and then rolling over. It gets harder to roll them over now.
Yeah.
It used to be easier to, say to somebody, we're gonna give you a first and second for the first 3 years. And I got in that way. In my 20s, when I bought my first house, we went first and second to avoid the CMHC fees because of qualification. And then I was able to roll it all into one mortgage within a couple of years. Well, now you can that's now considered, if you're rolling the two in, you're into a refinance, you can only go up to 80%, and you're under the new rules of the stress test. So it does make it a little more difficult now to roll those first and seconds.
So when's that gonna, take place? In November?
So November, the October 17th is when everybody getting a high ratio now has to qualify, no matter what term. You can take a 10-year term, you are still going to qualify at it's either the Bank of Canada rate or your contract rate, whichever is the highest.
Why did they never give any warning for people?
This is the first time they've ever done that, where it was so quick.
It was so quick.
So with that, what is the forecast on how long this kind of rule is going to stay in effect?
Oh, we have no clue.
So this is just something that.
This is something going forward, may as well consider it forever until someone decides that it's not going to happen. So at this point, consider it forever. But of course, nothing is ever forever, but there's no end date on this one. This is supposedly the new rules going forward.
Based on our study, for example, for other banks, they will say or other institutions, they say, this one is gonna impact 25% of the people or something. Normally for CMHC, found out it's about between 5 to 10%. That people are going to be affected. So it's not too many people who will be affected.
And what they're talking about is, because under the new stress test where you're qualifying at a higher rate, the number of people that previously were qualifying at the contract rate, the lower rate, and were right on the tip of the ratios, that wasn't a huge percentage. Most people we're qualifying at the contract rate and we're still well within the ratios, and if they had to qualify at the new higher rate, they'd still fit. The percentage of people that were taking the 5-year fixed because they could barely afford that house is a smaller percentage, 20 to 30%. So it's going to affect those people, but not everybody.
Well, I mean, it seems apparent, we had the discussion that first-time buyers are going to be the hardest hit because prices are still accelerating, and now it's going to be harder for them to get into the market because of the acceleration of the pricing, so.
And like Abdella says, be prepared, kids are gonna stay home longer, or they're gonna rent longer.
Oh, yes.
Oh, yes.
Or sell a couple more houses.
Mine are gone. Or they start returning home. So change their bedroom right away.
I can tell you from our experience, like from our experience about the other changes that's happened before. I don't want to tell you that, but that's what's, like before we did many changes. It happened with 40 years, 35 years and stuff. At the beginning, you see the market is very tight, everybody rush to buy and everything. Then it will slow down, then it will start going up again. So you don't need to be scared about that. So people, they will find different.
They'll find ways to get into houses.
That's right.
Everybody wants home ownership.
Yes.
And I would say either mommy and daddy are digging a little deeper into their pockets. If they really don't want them staying at home, I'll help you out, honey. Or they're gonna have to put up with their kids living with them longer, but yeah, they'll find other ways, they'll get in. Or like we said, first and second, you're gonna start seeing more seconds.
The minimum amount to get into the housing market for those people is 5%.
5%.
But you see an awful lot of people advertising cashbacks and nothing down. Is that going to limit that market as well? Or is that, are those incentives still going to be there?
Right now, those incentives are still there. Whether or not they remove those, that's called our flex down. It's our flex down product is what it's referred to. And did everybody understand that? So some of the banks, as opposed to giving you that discounted rate, will give you a posted rate, but will give you cash back. And some of them, depending, can give you up to 5% cash back, which becomes your down payment. So he's saying, are we going to see less of that? The answer is, I don't think at this point they're not pulling it, so I think everything's status quo. It's just, again, they're going to qualify for less because they have to use that higher rate when they're qualifying.
And what about investors? Is it still 20% minimum?
Yeah, they haven't changed that. Refinance is still 80% and investment.
All right, questions?
Thank you very much.
Thank you. And just so you know, Abdella will forward off the PDF of this so that you can actually get a copy of these slides. We'll send them over to Michael, and then Michael can send them out to you guys. So make sure that he knows how to get a hold of all.
Yes, thank you very much for coming
No
up today.
problem.